Okay, my beautiful friends, here we go. It is still Thursday. Yeah, it's really Thursday this week. I know I screwed that up last week, but it's it's Thursday. Yeah. June 17, 2021, people, post-market wrap-up. Let's talk, you and me. Let's start off with this market because it's insane. The NASDAQ, very nice gain today, put on about 1%. S&P 500 flat. Dow put on a slight loss, about 0.6%, although it was down a lot harder earlier today. Okay, what's the real story today? Well, there's a few. How about the dollar? The dollar today got vaulted higher yesterday as well. 10-year yield, I would still say it's stable here. But this dollar strength is coming off of the back, obviously, of the prospect that the Federal Reserve is going to raise rates once, maybe even twice in 2023. I'm going to let you in on a big secret here. It's not going to happen, okay? And you could refer back to this video here. The Fed is not done inflating, not by a long shot. They have no plans on whatsoever of lifting off. That's what Powell, the term he used yesterday, lifting off. I think he meant blanking off instead. I think it's more like blanking off. Yeah, the man has an issue, but that's okay. Many issues. So there will be no blanking off, seriously, in 2023. What will happen in 2023 or before that is the Fed is going to start moving goalposts. Again, we're in an economic collapse. We're in free fall. We're not adding any jobs. Net, we're losing jobs. Our economy is cratering. As a percent of GDP to debt, our economy is melting down. It's melting down. I covered all this yesterday. It's an incredible thing. In just the last 5 years, we watched the literally since 2016, the U.S. debt to GDP ratio was 100%. Now we're at 100, just about 130%. And in 2023, we'll probably be over 150%. It's an astonishing thing to watch here, but that is exactly what's going on, and it's going to get monumentally worse. So forget the talk. There'll be no taper, no turning point here other than the Federal Reserve moving goalposts like they do over and over again. And when the market realizes that, again, this knee-jerk higher in the dollar, it's a joke. Let's just hypothetically say for a moment, okay, the Federal Reserve, they're going to raise rates a fraction of a fraction in 2023. What does that mean? That means from now until the hypothetical point in the future, trillions of dollars in more debt issuance and debt purchases. This market should be ripping higher. But look, we don't even get corrections anymore. What happened today? Oh, NASDAQ higher, S&P flat, Dow slight loss. Okay, we do not get market drops anymore of anything substantial. 5%, 10%, 15%, 20%, which is normal. They don't happen anymore. And to me, again, you know what I'm going to tell you? This is a buying opportunity across the board. Across the board. Did you see gold and silver today off the dollar? Again, the dollar yesterday ripped higher. Today it ripped even higher than that. Gold and silver got smashed today. But again, what are we talking about? The paper derivative. The paper derivative. And it's a backward situation. You know how it works, but it's insane. So good. Just lovely. Cryptos also fell under slight pressure today. But look, you could stay in the dollar if you want to. You believe this knee-jerk higher is really it? Dollar's going back up with the Fed about to issue trillions of dollars in more debt? How about no? No, it's not happening. Anyway, crude oil today did fall, but still over $71 a barrel. It's a joke. Has no business being there. You know that. Absolutely. So let me just go over this with you. I wrote down a few lovely things here. So, just going back to my hypothetical, I even wrote this. I was like, rate hike in 23? How about now? And I go on to say, what does that mean? Trillions and trillions of dollars in more debt. the U.S. economy cratering even further by that point as our debt to GDP ratio, just hyper balloons. You can't make this stuff up. It's absolutely, and I said the Fed is going to move goalposts. How many of you, okay, with a show of hands, I can see you, believe that the Federal Reserve is going to move goalposts multiple times? When it comes down to the wire, when the Federal Reserve ever, okay, I don't think they're ever going to do it, decides to, raise the federal funds rate, because that's what we're talking about, the overnight rate, the Fed is going to continue to move goalposts. Again, they are on a mission to fulfill their destiny, their end game, that is to own it all, to own the world. By that point, I don't know if we're going to have a digital dollar, but that would be interesting to see how that plays out. We have more members of Congress, more bankers calling for this, and like I said, that's the way it's going to go. So I have no doubt whatsoever we're going to see multiple moving out of that goalpost there, people. So just get used to that. Let's move forward here. What else did I write down? At one point the Dow was down over 400 points. Even still with that, I mean, we cut those losses in half. There's going to be a lot of buying coming in here, in my view. A lot of the pressure on the market today really isn't about the Fed hiking rates. It's a distraction. It's about inflation, okay? Inflation, people, in case you don't know, if you're brand new here, is rising at its fastest pace ever. It's never, ever risen as fast as we're seeing right now here in the United States. It's skyrocketing. And the prospect of this is spooking the market to a certain degree, but it doesn't matter. Nothing matters in this environment. Again, earnings don't matter. Forward guidance doesn't matter. PE ratios don't matter. Nothing. It's about inflating. And the Fed is going to inflate, like I said, even if it is, and I do not believe it's going to happen. In 23, we're talking about trillions of dollars more debt issuance, debt acquisition. That's the way it's going to go. And this is massively dollar negative, despite this jump that we've seen here lately over the past 2 days. I mean, this is just some kind of a freak show. It's literally a knee-jerk reaction. Oh, the Fed, they're gonna raise the federal funds rate a fraction of a percent in 2023. So let's just all, the dollar is gonna get all kinds of stronger. Yeah. You gotta be kidding me. That's the insanity of the moment. That's what's going on here, people. You can't make it up if you try to. Look at the 10-year yield. Yes, it has come up a little bit. I believe if the debt market actually believed that the Fed was going to do anything meaningful, not just a fractional raise in the federal funds rate, which ain't going to happen anyway, you would see a bigger reaction in the debt market. That's the truth. With regard to the stock market, okay, what happened? Nothing. Actually, we put on gain in the NASDAQ, S&P flat, slight loss for the Dow. So I know there are some of you that were writing to me, Greg, this is the big one. We're going to crash now. Really? Oh, okay. Thank you very much. How about now? Ain't happening. No, not with all the easy money that's coming in here. It's not going to stop. So forget about it. All right? This is a buying opportunity to me, to my lions, to anyone out here who understands what's going on here. Not this dog shit, nonsensical stuff. It ain't happening. There's going to be no rate hike in 23. Ain't happening. I don't care how out of control inflation gets. The Fed is not going to do it. They're deliberately engineering inflation. All right. And the market knows that. But again, this is what you're going to see. Watch what happens here. Tomorrow, maybe. I wouldn't be surprised. Tomorrow, maybe even later on today. Next week, they're going to start floating out the creature feature. Oh, yeah, you're going to see Federal Reserve President Brainerd, Bullard, the usual freak show. They parade out here. Bostic, he's another one. And they're going to just reassure the market, don't worry. Don't you worry, because 2023 for the Fed may never come, because they're going to keep printing and we're going to keep adding digits to a screen and just forget about it. Again, the disconnection between this market right now, where it is, has no business here, and the economy in free fall. That should tell you something. It's just an incredible thing. Last week, 2 record highs with regard to the S&P 500 this Monday. NASDAQ and the S&P new record highs. Today we sit here on Thursday and we NASDAQ still put on another gain, S&P flat, Dow slight loss. And some of you think this is the big one, that this is it. We're going to crash right now. If that's really the case, what do you do for a living? I have to ask. That would be number one. Do you, I don't know, maybe you do something else, and maybe you should stick to that, because analyzing this market is not your forte. I can promise you that. So get out of the market if you're getting spooked or fearful. If you don't recognize what we have here for what it is and what is going on, then again, you have no business in this market at all. Get out, save yourself the headache. Go find another hobby, I guess. I don't know. Take up basket weaving. How about basket weaving? Yeah, absolutely. That's a nice one. Anyway, so that's the story, people. Forget about 23. And even if it were in 23, we're talking about trillions of dollars more. Debt issuance and debt acquisition by the Federal Reserve. This is massively dollar negative. Okay, this knee-jerk hiring of the dollar doesn't mean a damn thing. The Fed's determined to kill it. You know that. They're already talking about their digital dollar for the longest time. So you should really have a handle on what's going on right now. All right? And it should be clear to you that everything I have just covered, every syllable that came out of my mouth in this video is 100% true. All right, with that said, people, this guy loves you a lot. Please share the video. Get it out there. I will see you tomorrow for the next segment of The Freak Show. And I'm not talking about me, although I may be a little bit freaky. I'll see you tomorrow.